Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the Australian dollar versus the US dollar. So Aussie versus US. The date is March 22nd, 2020. Markets will be opening again here soon for the week. And we've had a lot of crazy market volatility due to coronavirus pandemic sweeping through the world and causing a giant market sell-off. How that affects U.S. dollar pairs is that the U.S. dollar is considered, to be the world's preferred reserve currency, meaning that when times go bad, people sell their stocks, they put their money into U.S. dollars. That's exactly what we see happening now with major stock market sell-offs. So while technical and fundamental always work together, sometimes sell-offs are due to technical. This is definitely due to a fundamental reason. Let's go ahead and pull up our pivot points for the Australian dollar. I was just doing the pounds, so that's why that's up there. Okay, and let's go ahead and zoom in our daily here in a second. Here we see our multi-year downtrend, sentiment bearish, more selling ahead. Prices broke below the 61.82 and the 68 mark, basically triggering a massive sell-off. This support was significant back in 2009. We saw the 61.80 mark hold. Prices snapped below that pretty significantly this week, and a giant bearish candle closing below this line, meaning typically we'll see maybe a slight retrace, but then possible selling ahead down to at least last week's low of the 55-cent mark. We see price moving well below this moving average. Let's go ahead and zoom the daily and put our pivot points up. So Friday did show a strong bullish candle. This could be our short-term turnaround, and I say short-term because obviously the long-term trend is down. But this bullish candle, and we see this in a lot of the USD pairs, ended this week with a bullish closing body above the previous week's bearish body. Which means we may see a short-term turnaround scenario. Let's go ahead and look. Our pivot is at 58.74. Let's go ahead and draw our line to that. 58.74. That's our pivot point. I think of pivot points as a most likely scenario that price probably will visit that at some point during the week. So then beyond that, we look at R1 at 62.39. About there. We see that last little plateau broken by price. So R1 0.6239. Okay, which lines up where if we imagine that price were to spike up next couple of days, right? The U.S. government is rolling out the stimulus package right now, which could cause a short-term turnaround markets. Then we can see price move up quickly to the 62.39, but remember that the fast-moving average, right, is sitting here right, basically I'm looking for my next sell-off right around this line. If the fast-moving average and R1 converge with price, then I'll probably be looking for an opportunity to sell. Let's go ahead and look at R2, 66.73. So here we go. That's our next resistance, and we see that was resistance before, back when this short-term downtrend started. Trying to make a quick rally here, and then was rejected. Boom, and the sell-off ensued. So R2 66.73. Okay, put that up here. If we want to see price, where's R3? 74.72. That's way off this chart. In order for that to happen, price would need to first go through all these, so unlikely scenario. Let's focus on the more likely probable scenarios. Where's support one? Let's say the selling continues, 54.40. And that would be right about here, right? That's just below our last low. And as long as price stays below this pivot, the bodies of the candles, that is a likely scenario. So S1, Okay. Now, in order to see what would happen if that breaks, let's go ahead and zoom back out to our weekly. We see S1 there at 54.40, S2 at 50.75. So that would be right there. How does that look historically? Okay, that's our 2001 marks that we price visited there in 2001. As long as price always has some kind of support, like it's been there before, you can rely on some price to pause there. So when we get into free fall zone is when we set new records, but we're far from that. We still have some. Sorry, that should be S2. Some significant support both at 54.40 and 50.47. Going back into our daily, let's think about what happens if this retraces in a Fibonacci way, right? Let's look at this last high, last low. The Aussie dollar pair always has some unique shapes. It doesn't look quite like the rest of the charts. Okay, so if we think about it this way, price already has revisited the 23.8 and then was rejected. This could be the end of the rally. Or if price closes above the pivot point, let's say tomorrow or today, the price closes above the pivot point as we go into Tuesday, then we could see a visit to most likely R1 at 62.39, which happens to be right about the 50% fib line at 62.67. Any extreme shadow or tails would probably be capped at the 64.45, the 61.8 Fibonacci ratio. If we think about it in terms of trend, price is moving far below this top trend line. But if we were to put a parallel on that, we could say, okay, well, what's the equal size zone moving at the exact same trend distance? It would be that. Let me see if I can change the color for a better sight. That did not do it. Anyways, so I think price will be capped at 62.39. All right, everyone have a great week. Hope you make a lot of profit trading. Stay safe out there.